I think it's very plausible that the long-term effects will be significantly negative. We will lose a great deal. And the short-term effects could be quite a shock. Indeed, I argue in my column that it could be even worse than the Treasury says, because the UK has obvious fragilities, which they don't emphasize, and the political consequences of a Brexit vote for the UK, what sort of government it would have, and how we would negotiate are really unknown and unknowable. And that for these fragilities could mean quite a big negative shock. I think there's one risk that the Treasury mentioned, but I didn't say enough about, which is the fragility caused by a huge current account deficit. The deficit was 7% of GDP in the last quarter of last year, which is enormous, a level at which crises are often expected. That means we depend on capital inflows to finance this, and it is quite possible that the shock of Brexit will reduce these capital flows. That might be particularly important for our banks, which are very dependent on foreign capital inflows. So that could be a big source of danger. And the other is politics. We don't know what the future government will be. We don't know what its policies will be. We don't know how the EU will respond. And that's a huge source of fragility, which of course the Treasury by definition couldn't discuss. Well, I think in aggregate and overall, it's pretty clear that the British economy has done well in the EU. In fact, it's done exceptionally well because we've exploited the opportunities well, and we've also reformed our own economy, which the EU has not prevented in any way. So the combination of our domestic reforms with the open market has made Britain one of the most successful countries in Europe, and certainly the most successful of the big countries over the last generation. A richer country means higher public spending, more resources. The immigrants clearly are net contributors to our public finances, certainly the EU immigrants. So again, that helps in supporting the NHS and schools and pensions. So in aggregate, I would say the blue-collar workers, working class people have clearly overall benefited from EU membership. The huge negative shocks we had in the early 80s had nothing to do with EU membership. Of course, other things being equal, migration probably has a modest negative effect on some domestic workers. The evidence on that is very mixed, but stopping our membership of the EU overall, I think the adverse economic effects will overwhelm any gains you could imagine from the labour market impact of closing down on immigration. Under plausible assumptions, the Brexit is not a globally significant event. Probably not. But it is worth remembering that at least in the Western world, we haven't fully recovered from the crisis. The ammunition that central banks have is mostly exhausted, or certainly it's difficult to use. Rates of interest are close to zero, and other measures certainly have controversial effects. And the political implications, again, might be seen as worrying. People might conclude, for example, well, if Brexit can win, maybe Trump will win. And that could affect that. But I think the more obvious economic effects outside the UK will be on confidence in Europe and confidence in the Eurozone. I think it is possible that people outside Europe will say, well, if Britain wants to leave the EU, there must be something really seriously wrong with the EU. We can't really trust it. We should pull out our capital. I don't think, given the current situation in the Eurozone, that will be destabilizing to a high degree, given the role of the ECB, but it could provide something of a shock for the Eurozone. And it's worth remembering the UK is a very important trading partner for the Eurozone. So if the UK went down, it would have that effect too.